Hi friends, welcome again to Money Matters. Hope you had a great trading week and hope you have enjoyed whatever content I have presented so far. This week I am going to talk about a very important topic which is applicable not just in trading but to any investment area. And as you have guessed from the title of the video, I am going to talk about why you should cut your losses quickly in trading. For those who are experienced in trading and investment, this tip is all too familiar to them. But to those who are just starting in this business, believe me that this is one thing you should follow religiously in your trading career. One of the most common sayings in this business is, cut your losses short and let your winners run. This is a very good advice. However, most of the investors appear to do the opposite, and is the reason why most of the traders fail in this business. They appear to sell the stocks after a small gain only to watch them go higher, or hold the stock with a small loss only to see it going down even further. Problem is with the personality of the trader. By avoiding selling a stock at a loss, many investors do not have to admit to themselves that they have made a judgment error. Under the false illusion that it is not a loss until the stock is sold, they continue to hold the losing position. After a stock suffers a loss, many investors plan to hold on to it until it returns to its purchase price. They intend to sell the stock once they recover their paper loss. This means they will break even and erase their mistake. Unfortunately, many of those same stocks will continue to slide. And by doing this, not only do they waste time, like if they would have squared off the position and put it in a better stock, or even put it in a fixed deposit, they would have got a better return. Also, they are eroding their capital which could have been put to better use. Like the great Warren Buffett says, the secret to making money is rule number 1, never lose money, and rule number 2, never forget rule number 1. Now just to share how this works, I have shared my screen, and let's say that I have 1 lakh in capital and decide to put it on a trade. Let's say I lose this trade and suffer 20% loss. So I'm down to 80k now. Now we lost time waiting to suffer 20% loss, and to get back to break even, I now have to make a profit of 25% on my next trade, and this is just to get even. It's not like I can make it back with just 20% of profit. I have to make 5% more. Now let's take another example where I gain in the first trade. So I gain 20% and my capital rises to 1,20,000. So it's very nice. And now when I put in the next trade, if I lose just 16% of it, I get back to 1 lakh rupees again. So do you see how easy it is to lose time and capital? You wait to make money, and then with one single stupid decision, you wipe it all off. And the problem compounds with a bigger loss. So let's say I make 50% loss in my first trade. So you see, in my next trade I have to make 100% profit just to get back to break even. Now the next thing I want to focus is on losing time. For this I have for you one more chart where I have calculated what kind of profits would I make if I have 50,000 with me and I do 10 trades a month with 5,000 allocated per trade, and out of which I win 60% of the time. So I have drawn 3 cases over here. So in each of these 3 cases I win 8. However, I lose only 3% in case 1, 5% in case 2, and 7% in case 3. As you can see in the chart, after just 10 years, how a difference of 2% reducing loss can affect your balance sheet. Now let's say you cannot reduce the loss for some reason. Maybe your strategy has a good chance of success but not a good enough risk to reward ratio. So if you win 8% and you lose the same when you lose. So let's see what happens in case 3 when the chances of my success increases to 70%. Okay, so the balance improves quite a bit, and if I change it to 75%, okay, then it's remarkable. But the problem here is finding and executing a strategy which gives me a 75% chance of winning. The experienced trader will tell you that most of the time it's not the strategy but our emotions which keeps us from succeeding. So over a period of 10 years, you have to win 900 of your 1200 trades, which is quite a lot. Now let's see what we have to do to catch up to case 3. So let's say I find a strategy which gives me 5% extra chance of succeeding in case 1. So now I have 65% chance. So you see, just by adding 5% extra in my trading strategy, the case 1 is performing remarkably better than case 3. So just trying to find a strategy that gives me 5% extra edge will trump over a strategy which has to guarantee 15% more. So looking at the chart and the figures, you can imagine the potential if only you can control your emotion and reduce your losses. You can be a crorepati in 5 years or 15 years depending upon your trading pattern. I hope this video serves as an eye-opener for newbie traders and they focus more on the risk. Hope you had a great day and stay tuned for more Money Matters.